you looked at this and you said that the 4-hour demand zone would not take out the supply and liquidity, which is exactly what happened. Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx. And a very, very simple issue I've seen from a lot of people is the idea of when they're using this 3-box strategy. So as you know, I teach the 3-box strategy here on the channel, and now everywhere else on YouTube, the 3-box strategy in its own way is kind of being taught, which is great. I'm really happy about it because it means people are learning, but also there's a lot of poor information out there about it, and the education in the entire space is actually really bad in terms of how you need to focus on risk management the right way. So what I'm going to be doing today is actually breaking down a trade I took last week for you on Friday and exactly how I managed it, as well as breaking down a forward tested trade that I sent out before it happened to the mentorship right here that was taken on a higher time frame, and show you why management is such a key element in the way you trade and how trading from a standpoint of risk management and 3-box strategy the right way should look. So the issue I've seen with a lot of people is they'll be following a structural narrative, and that structural narrative will have a shift in structure, right? So let's say there's a shift in structure here, and as they're following the 3-box strategy, so they're looking at their impulse, they're looking at the S&D, and they're waiting for the confirmation of that S&D, right? What happens is, if price comes up there and gives you that confirmation, right? Some people get their confirmation and one, they just don't get in at all and they're really upset about it. That's fine. But another thing that happens a lot of the time is it comes in, gives you that, right? You start getting involved. Maybe you get in, maybe it goes into a little bit of profit and then it just goes against you. And this might be an issue whether you're in the smart money space or even the retail space. It doesn't really matter. I've seen this issue a lot with people that are new, coming on, beginners, and people that haven't really been taught the risk side of trading and haven't been introduced to it in any way because maybe I haven't done it enough, at least maybe on this channel, so other channels haven't picked up on it yet. So maybe after this video, we'll have other channels pick up on the risk management side and you guys can learn even more. So what I'm going to do is I'm going to show you and break down this official trade right here that was taken off of 1 second, and I'm going to break down the forward tested, so I didn't take this one, but I sent it out before it happened. Trade right here that was taken on a higher time frame, actually it was somewhere in here, and I'm going to show you the importance of management and what it really means to manage a trade accordingly, especially under this 3-box methodology. So what I'm going to do very quickly is I'm actually going to delete this entry, but I need to go and make sure I know where this entry was, because if I lose it, then because I took this in real time, so I'm probably just going to lose it if I don't. So it's taken around here. Okay, cool. So we'll leave that up. There we go. And we'll delete everything else basically, right? So what we'll do here is we'll go in here. Let's find this guy right here. There he is. Cool. So we'll move him all the way down so I can delete everything else. There you go. And we can delete all of these right here. Beautiful. All right, so the main trade was somewhere in here. We're just going to leave this up so I can see it for myself, just because it makes it easier for the teaching side. There we go. Okay, so, oh, that just disappeared. Very nice. There we go. All right, so what we're going to do is we're going to break down that 1 second trade, and then we're going to break down the rest. So very quickly, the way I've taught always on this channel, and we're going to just break this down from the very get-go, is to start on the higher time frames and work your way down. You can either do this by going to the higher time frames and then working your way down, or you can do this by being on a lower time frame and zooming out, right? And you can zoom out to see a lot of the data that you can see on the higher time frame, right? Like this impulse right here, we know is that daily impulse. And again, on the 1 minute, you can still see that, right? We zoom out and actually you can't see it on the 1 minute. You go to a 5 minute, I'm sure you can see it. Oh, maybe we have to go further, like 15. Yeah. So on the 15 minute, right, you officially get to see that. You know, on some time frame, right, there's a huge break of structure here, and we can expect that more likely than not, price will make its attempt to reach up into either the liquidity portions of the inside range. So we know that all these fake little structures are going to be invalidated when price reaches above them, because they're no longer they're no longer institutionally relevant from a standpoint of footprints and where money might have been involved, and it's probably going to reach up into a inefficiency or supply zone before looking to go short. And if it does, that short will probably be met with continuations down, right? So of course you could do this way and see this across the board. And again, the reason I'm doing this is because it's going to be important for the management side in a second. So we're going to talk about this in a second. But you can also, instead of zooming out to do this and make it more subjective, you can make it more systematic and go across time frames. So if we go to the daily and we move down here, for the longest time now, I know people in the mentorship know this, maybe you guys don't know this on here, we've been bearish ever since, I believe, this break here. And we've been catching all the beautiful bearish moves longer term on this. Of course, we have bullish plays in there of course. And then we broke down most recently below this low, right? So we have this structural break down right here. And ever since that structural break, we were looking for price to make a bullish retracement up into this supply and demand zone, which we then went ahead and refined because, as you know, candlesticks can be refined to their wicks. You can see this wick was just a little bit taller than that one. So that supply zone was refined to this one because why? That wick on its own is its own unmitigated portion of that move on a lower time frame, right? This is what we've taught forever. If you go to like a 4 hour or 8 hour, there's going to be its own up move there, right? How does that look like? We go to the 4 hour, right? You look to the left here. Here it is, right? You could refine to there, right? Again, price hits it either way and then absorbs a little portion of it. But I left it to this zone because that's where we were targeting based on this daily move. So here's your daily break of structure. Price makes its way back up because it's failing to go higher and undergoing this basic absorption, right? So it's taking those highs, but it's not pushing through. There's no displacement, something that I teach also on this channel. Whenever you hear me say that, look up that thing that I'm talking about and go to my channel and look it up and witness it because all these concepts intertwine. I can't make one video on everything. It's impossible. I do my best. But people that have been here a while have basically taken this and made profitability for themselves out of it. And people in the mentorship, of course, have done that on a completely another level. If you want a piece of that or a portion of that or learn from that, check out the link in the description, but you don't need it. Follow along with this. So from that bias, I was looking for price to come take this out. I'm still looking for price to come and take that out this low. So overall, I'm actually bearish on this overall market. Ever since it tapped here, failed to go above, absorbed basically the supply that was in that area, and now we're coming down. There's distributions on behalf of smart money, and we're looking for that to keep going short, right? So we're gonna basically search for it to keep on going short down into there. Now, we go to a lower time frame, right? And as we do that, we notice that within that lower time frame, we actually have a bullish structure, right? That's your bullish structure from that high to that low. And even though it's bullish, we once again need to remember the ranges we're on a higher time frame. And because we're in a bearish range on this higher time frame and failing to go above the bearish range, and not only failing, but also absorbing the high of it without breaking through with displacement, we know that this demand zone is actually going to act as a very short-term bounce before most likely continuation. And I'm going to play back a portion of the webinar before this happened so you can see me say this live. So for me, the zone is this one right here, right? So now we have a zone that comes in regards to where we are from a structural standpoint. And what I'll look for at the start of the week basically is either bullishness in here and continuation down, or the start of the week continuing down first and then give me that bullish play into there from maybe that 4 hour zone, right? But not using that 4 hour zone as a target for that top side, instead using it as a confluence of this move down here, right? And then continue that move down. But overall, the bearish side is what I'd be looking for. I had actually someone reach out to me today, right? Yeah, right here, before the webinar today. Basically, he said, hey, Anton, last week in the webinar, you did a great section as to why you select certain zones. You know, you looked at this and you said that the 4 hour demand zone would not take out the supply and liquidity, which is exactly what happened, right? So what I did last week is you can see, here's that same bias, here's that EU, here's that zone that hasn't been refined because I'm using that daily wick, right? I draw this out, I say you should expect price to come and tap it, go a little bit long, and then continue short. You can see this little line right here that keeps going short, and you just saw the little playback of that should play either now or has played before. Now that you've seen that and understand that, right, the bias is still to the downside for me at least, right? Oh, sorry. The bias for me is still to the downside, which means that even though the zone exists, right, and it's now supporting price as part of this bullish move, I'm not looking at it to come and take out highs, right? So this is something that's really important. Already you can see how this 3-box methodology, based on your understanding of it across timeframes, can change, right? And can still give you profitable setups. You can still have buys in here that take you long for a little bit, but if you're someone that's taking these longs and looking to target up here and just leaving it, you're going to take a loss on this and once again be confused. You're going to walk into this issue where you have a zone, price comes into the zone, right, and just goes through it. Right? A lot of smart money doesn't really teach you about this, but that's what's occurring. What's actually happening is you're just experiencing this higher time frame delivery and you're not looking at it across time frames, right? Even though I enter on the 5-second and 1-second time frames, I still use my analysis from the monthly, the weekly, the 8 hour, the 6 hour, the 4 hour, right? I'm analyzing across the board because for me, it's about understanding where those footprints lay and using those footprints to basically get involved in my own strategy that allows me to then target those higher time frame zones, right? So as a result, I was actually looking to continue that move short, even though we had this zone, as you saw. So under that bias, right, I still have this low as my bias, right? It doesn't mean I have to be right? This price might not do this. It could just go up, but I expect it to do this. And as a result, I'll be expecting it for at least the start of the week to come and clear this low here. And that would also in motion put this clear here, which again also reflects the idea of S&Ds not always holding, right? Notice that an S&D, when it exists, or supply and demand zone, when it exists, doesn't mean it's meant to hold price, right? It's not meant to be the last point for price, which is why management becomes a really, really important and vital element. Okay, so now let's break it down into what actually occurred for me, okay? So on this lower time frame, as we follow this, right, we had this zone right here drawn out. Why? I believe it was a 2 hour. Yep, it was a 2 hour zone. There we go. Right, and what we're looking at right here is this failure to go higher and the breakdown of new structure within there, right? Here's your breakdowns in structure. So at this point, I was happy to go short. And even though you could have used an area in here, because we have inefficient price action right here as part of a higher time frame bearish move, right? As part of a lower time frame now bearish move, we know that even though this area is valid for sells, we can still have a liquidation of a high before we continue short. And again, we come into an area where a lot of dumb smart money is getting very dumbfounded or is being surprised, right? And what happens is they start viewing this right here as a bullish break. And what they're doing is they're already watching to buy here. They're watching to buy here. They're watching to buy here. They're looking at all these places for buys, right? But the reality of this market right now, especially if we're looking at these higher time frames, is that it's showing you wants to go short. It's showing you the inability to push through on that higher time frame. It's showing you it's wanted to absorb the higher time frame and not continue through or displace, but instead continue down. And now it's basically absorbing and showing you the same thing, or at least showing you that weak to strong transfer inside of here, which again on a higher time frame you can view and trade down. We're going to talk about the forward tested one in a second, but let's talk about my entry. I still at this point had no entry running at this whatsoever. We get down to a 15-minute, right? The 15-minute most recently undergoes its distribution, undergoes its bullish structure that then shifts bearish. That bearish structure shift occurs right here. And once again, you have the same idea, right? What could you do? You could be a seller right inside of the supply zone or the last up candle. Both are valid here because both create and leave behind. What do they leave behind? This inefficiency right here. So we know that's a valid area from which we can go short from, right? So of course, that's where we want to go short from. And notice already, there are 3 box setups on both sides of the market. And they're happening across time frames. And based on your own understanding or lack thereof, especially if you've been taught this 3-box methodology on a different channel that doesn't really know how to aim at this multi-time frame approach, you're looking to buy the wrong areas. So from there on out, I was basically short on this market. And the failure to once again push higher and go lower, right? So notice what's happening here. This 15-minute chart is exactly the same as the daily chart, right? Notice this. Impulse, failure to go higher, move down. Okay, so we're bearish, right? Look at this 15-minute chart. Impulse, break a structure, right? Comes up, failure to go higher, absorption, looking to do what now? In my mind at least, or what have I been doing? Looking to go short to this low, okay? Did it actually get there? Oh yeah, I think it did get there at the end of the week. That's the low we're looking at. And why are we looking at that low? Because it's part of this higher time frame bias, which is this 3 box from there to there. And that's part of this 3 box. And notice very quickly how this idea of the golden goose method with the multi-time frame approach, just by zooming out, can give you that entire can give you that entire picture, right? You don't need any volume there to know that it's going short. You don't need anything else other than the fact that we have the candles to prove it, the unmitigated and the mitigated portions of each time frame, and their imbalances as a result of those time frames and a result of that push. Those footprints in the form of those supply and demand zones and the failure to push through those zones. So at this point, I was still not in any trade, right? We can break this down even further. We get down to a lower time frame, and already you can see on this 5-minute, what had occurred, for me at least, was once again, we had a break of structure, right? A bullish market right here, turning into a bearish market, right? Coming and creating an inefficiency from that wick to that wick that needs to be filled, thereby creating a valid supply zone that we can trade from. And what do you see? What do you see, guys? It is the same concept we just saw in the 15-minute and the daily, right? You have a, what do we have? A bearish impulse with a failure to go higher, with a run that we now are looking for of liquidity. You have on a 2 hour, right? Or maybe even a 1 hour. Sure, 2 hour, no, we don't have it. 15-minute, right? You have an impulse, a return to liquidity or return to S&D, a failure to go higher, a push down. What do we expect? The run on this low. within the expectation of the run on that low, in that overall trend, we go to the 5 minute, what do we see? The push down, through a bearish break, the return to the S&D, the failure to go above that S&D, the absorption of it, the push down. I'm still not in a trade. Notice how long you can wait to be in a trade if you really want to overconfirm, as I do, before you ever look to get involved on anything. This is because of the way we think. So where's the next run on price supposed to be? This low, right? When did I start watching price? When it wasn't there, when it was around here, right? So the next run is still seeing as that low. And notice how it's stacking up with the timeframes. And notice how we can now basically function under this idea that even if we're wrong about this move right here, and price just does this, or this, or this, or this, we can still be right big. Because we understand of how not only we're getting in, but how we're going to manage that trade after. So let's talk about that management side now, okay? So we jump down to that 1 minute. Okay, this is going to be a fun time. What are we going to see on the 1 minute? You guys can already guess, right? On the 1 minute, what do we see? Structure is bullish. Structure breaks bearish. Bearish. I went to confirm this for a sell during that time. It broke long, okay? We have a long break inside of a bearish bias. So notice, even though there's a 3-box setup here, a bullish intent, an area to go long from, there's not, first of all, there's no confirmation, but also it's within a bearish market. So why would you look to take this 3-box method? And once again, we get back to the same idea of why a lot of your 3-box methods, or the way that you've been following to follow this 3-step process, you're getting stopped out on these moves because you're looking at the wrong move, the wrong range, and at the wrong time, right? You need to find a way to so what's it called? To marry these time frames with each other and understand how an overall system bias creates in motion all of these lower time frame biases, which if there is that higher time frame bias that's going short, there's going to be lower time frame biases that are going short and going long. And you need to do, and basically as a result of your understanding of that overall thing being short, you need to be able to basically dissect yourself from the idea of needing to go long or short at any one of these 3 boxes, and instead follow the ones that are best in terms of the setup, right? And forget the idea of needing to find the biggest move from the area that it comes into firsthand, and notice that you can follow a move through until a 3-box method suits your actual entry criteria and your given risk, right? So this idea here, notice what's important here again, a bearish market, right? Overall bearish, a bullish area that you could go long from, but we don't because of that understanding. What do you think people from a retail perspective or a down smart money perspective are trying to do at this 4-hour zone? There's a very good chance, right? Let me just play this back to real price. So real price is right here. It's actually open right now. Real people, or down smart money or retail people, right? And I might be wrong about this, are looking at this as some kind of, resistance or support holding like this, or looking at it as a demand zone like this, and looking to buy this up and are now holding this for dear life, something like this, to come and run new highs, right? Because in their mind, they're seeing this as that's the most recent range and that's the 3-box. If they are following the 3-box or following some other mentorship. But in reality, this 3-box, even though it's valid under the assumption of break a structure, return, continuation, it's not valid under the overall premise. And this exact same thing, where this is that 4-hour zone in a bearish market, is what we see right here, right? On this 1 minute, we see this bullish zone in a bearish market. So why would you look to buy this? See, this is that same 4-hour area. So as we're doing this, you should very quickly see how the time frame you're on doesn't matter. The move is exactly the same. From weekly, monthlies, 8 hours, like all these hours, they're all the same to the 1 second. The move is exactly the same. There's no difference whatsoever, right? So let's continue. So instead of taking that buy or looking for even a considerable buy there, I wait for a short. The short breaks down, right? We get a breakdown in structure. We get another breakdown in structure. At this point, because of the way I teach double MBs in the mentorship, so if you're there, you know why we did this. Otherwise, you can take this for what it is, but consider structure in the form of, if you have a higher high or a higher low, what's happening is on one time frame, you have 2 areas. On a higher time frame, you have 1 area, right? So if we go and look at this on a 3 minute, it'll probably be 1 impulse, right? There it is, right? You kind of have like 1 big impulse, or like a 5 minute, right? You have an inner bigger impulse. It's kind of hard to view, which is why I teach my students in the mentorship to view this the way we teach them to view it. But what I was looking for at this specific moment in time is the possibility of going bearish, which for me, I was happy to look to go bearish here. and right here, right? Both supply zones of a 3-box method. So either this is the 3-box to go short, or this is my 3-box to go short. Notice the 3-box has its own little bit of play that you can make with it. Even though there's this impulse backwards and then a continuation down, I'm still happy to use this area. Why? Well, because this 3-box, as part of this, if we zoom out a little bit, this double 3-box is part of a higher time frame 3-box downwards, which is still part of an even higher time frame 3-box downwards, which is even part of an even higher time frame 3-box downward push. So for me, right, it makes more sense to look for an excuse or a good 3-box methodology that wants to go short rather than all these inside areas that want to go long. And what's happening at the same time is a lot of people that are taught from the dumb side of smart money are looking to potentially see this break of structure here and already looking to long this area here or this area here, right? And once again, they're getting into the striped pajama mindset. They want to long these areas that are already basically primed to go short. Smart money has shown its hands. Where'd they show their hands? Up here. At that daily zone, right here. At that daily zone where it failed to push through with absorption. So notice how this 1 minute trade, right? This 1 minute double zone, right? This 3-box zone is affected by the relationship with that higher time frame. And as a result, right, as we zoom into this, as we take a look, when we get there, I'm still ready to look for sells because I know the sells are more determined in terms of what the footprints are doing. And even though this is breaking structure, for me, it's nothing more than the liquidity grab, right? Because it's looking to continue the move that's already established as part of a multi-timeframe 3-box bearish methodology, right? So what happens is this price gets there. How did I take this sell? We can jump down to the lower time frame. This is the 5 second now, right? We can go inside of here. So I broke this down in the mentorship, but I'll break it down here too for you guys. Notice I'm not interested in any of these dumb 3-box setups right here, right? We're taking away the psychological issue for a lot of people where they were looking for zones and they either A, just got traded through or broken through completely, right? Why does this happen? Because you're not paying attention to these things we're looking at right now, right? So that's the zone we were looking at, right? And now, once again, on a lower time frame, what do you see? Wyckoff in our area of interest, our POI, our S&D, whatever it is you want to call it, right? People have called it a whole variety of things now, and that's okay. I hope they just refer to it as one thing, but you're looking at this point of interest, this area of interest, this supply zone to go short. So what are we looking at, right? Well, we're looking at the Wyckoff, right? Weak to strong hands, which you can then look to short. Great shorts there, but the way I look to get involved is off of inside 3-box methodologies. So where's the most recent 3-box method? Right here. It's bullish. And a lot of people already, even dumb smart money, are looking to buy this. And guess what? That's their confirmation they look to get in, right? There's retail looking to do this. There's dumb smart money doing this, getting involved. They're looking to target the high. Again, not considering where they are in a higher time frame approach. And that same mistake that's being made here is the same mistake being made, most likely, at least from my point of view, because I might be wrong about this, being made here. A lot of people are already, from a retail perspective, looking to do this. A lot of them are already buying this, looking to target the highs here. Now, again, this video might be a flop because I might be wrong about this, but I'm more right about this over time than I am wrong. So I'm okay there. Again, this is live price. You can see this right here, right? This is live price right now. I don't know if it's going to come and hit this, but my anticipation is that it will because it's not part of a higher time frame narrative, right? The higher time frame narrative is still short. So just like we saw that 5 minute or that 1 minute or that 5 second bullish box, we're not looking to trade that because it's not part of your defined bias. You need a bias, right? So as we jump back down there, so let's go ahead and jump back down into that price action. If I can actually get rid of these. Doesn't look like I can, so I have to do it manually. There we go. So as we try to jump back down into that bias right here, right? And we look to actually take a look at what occurred. And we see that failure to go higher, that move down. We get to that 5 second then, right? Here we go. So I can show you guys why I took my entry and how I took it. 5 second entry. You're looking at this 3-box and people are already going long from it. This is the same mistake people make on any higher time frame. It's the same mistake just on a lower time frame. That's all, right? Instead, we're waiting for a reason to go short. Even though there is a long setup, we're not looking for that because we know where we are from a higher time frame perspective. So as price breaks down, now is where we're looking for our shorts. Where? Well, here's your 3-box setup, right? We break down box 1, box 2. What are we looking for in here? Wyckoff. You can already see the Wyckoff, but let's jump down a time frame, right? Here we are, lower time frame. Now, there is Wyckoff here, right? I'm not going to break it all. Actually, I'll break it down for you, right? Buying climax, AR, ST, a form of upthrust inside of here. These are mini upthrust, but you can call this the main upthrust. Break a structure, test, break a structure, test, continuation. That's the main entry criteria. My entry was right here. For me, I was looking at a 3-box setup entry within it. You don't even need Wyckoff to enter. You can just confirm with another 3-box because a 3-box is its own Wyckoff, right? So what do we see inside of that 5-second area? Because that's when we want to trade. Because now it's bearish in reference to our multi-time frame applications of this bearish scenario, right? So as we get to that 1 second, and we zoom into there, right? There, right? Where's the most recent 3-box setup? Well, here's the impulse. Here's the zone. What do you think smart money or dumb smart money is doing again? Dumb smart money or retail, right? Even though they're not watching the 1 second chart, they're looking at this on a 1 minute and seeing the little of the candle, right? And when they see that, that's their confirmation sometimes. So that's all this is, right? A 1 second chart just represents what they're doing anyway. It just represents their emotions. And they're getting involved on this. Looking to target at least this high or potentially these highs. Because they're looking at this as a 3-box, right? Without considering the fact that we're breaking down. So once again, even though it's bullish in here, what are we looking for? Bearish. So we wait. And the bearish break happens, right? Now we have a bearish break. And what did I do at this bearish break? I set up a sell. Here's a bearish break. Here's a 3-box. This is where I set up my first sell. Just like that. Stop loss, not just above the high considering mitigation, and a little bit higher to account for spread, whatever it is, right? I always account for spread, so just keep that in mind. Looking to target lower. Then what happens? Price fails to get there, and instead makes a new breakdown. What is that? That's a 3-box method, again, right? Impulse, mitigation, or SND, look to sell. Look to confirm if you want, or if you're done confirming, that's your sell. Where do you think I took my sell? Right there. This was my sell. Now, it was a sell limit, right? My stop wasn't here. I made it 0.5, right? Because I wanted to account for some spread. So no problem there. This one got canceled after it broke down. But now, right, a lot of people, I've had people ask me this even on YouTube, are like, bullshit. You can't place that fast enough. But remember, I've been doing this for years on end. I'm experienced it. I know exactly what my rules are. So notice, how much time could you have taken to place this, right? Let's look at the last candle that mitigated it. So this was your last chance to place a sell limit from the point that it broke, right? There we go. You have 21 seconds to place that sell limit. Is that enough time? I can guarantee you it is. If you know what your stop loss normally is, because it's always either 1 pip, 2 pips, 0.5 pips, you know what your lot size is instantly, which means all you need is the price, right? So, you could go test yourself. You could go timer, 21 seconds. Let's set this up to 21, right? Save, right? And then you can test yourself. You can go, okay, here it goes. I get my break. It starts counting. Okay, I know my stop loss. I go to my MetaTrader. I click on the box. I type in the number 1.13571 place. Did I have time? Yup. And time to spare. While I'm talking to you, while I'm showing you just this abstract way of, I'm thinking, even though I'm not thinking about this as I'm doing it, because the understanding is there. And since the understanding is there, when it's validated, I'm in. And if it breaks down again, I'm out. There's no reason to get in, right? The 3-box is unverified. Then we wait, right? We break down. A new 3-box forms and breaks down. So now what do we know? Price should always stay below at least this, and it might come back, but it should stay below it, which means this trade already, after, let's see how long this was, after 24 seconds of being in the trade, is at break even. That's why risk management is so important. This trade is already at break even. For a lot of people, if this trade came into this and then went long, that's a loss for them. They will consider this a loss. And this will happen across all time frames. I'll show you an example in a second. But for me, this is either a break even or a big win. And lo and behold, right, what do you think occurred with all my targets in place? I mean, we can just play this out now. Maybe we'll go to a 5-second, play this out a little faster. Here we go. Right, what do you think occurred? We're already holding this trade at break even. All we have now is just partials to take, right? First area gets met, I'm pretty sure. Next area is here. That's it. Okay, area gets met. Looking for the next one. Now I close this with my own management of the 15-second, which we'll talk about in a second. So we'll go to a higher time frame now. because I was following this. This was on Friday, and I like to have all my trades collapse on Friday. But let's keep playing this. Kept watching this, right? Took a partial already in here, over here, waiting for this area right here for partials, right? Here we go. We're just waiting. That's all we are doing, right? And notice what's so important. This 3-box did work, but imagine it didn't. That'd be a break even for me, right? Or maybe I'll take a loss, right? I actually took a loss in here before this confirmation. Not all 3 boxes are going to work, but notice the importance of even this 3-box setup and how much depth you can have to it if you understand how to pair it across timeframes, right? So we can just play this out a little bit here. But yeah, there we go. Just playing around, whatever. All good. Yep, just doing its thing, right? Coming up to close to break even. I don't care. All partials have been taken. Everything I need to do has been taken. The next one is set, and I'm just waiting. That's just how it is, right? I'm just waiting. Let's go to the 1 minute. Let's play it faster. Just waiting. Does it get there? Does it get there? Yes, it does. Great. So it gets there. Where's my next partial? Because I wasn't done with this trade yet. I continued to take partials as we went through, right? So let's go back up to a time frame. Next partial was set here. Okay, same thing. No difference. The exact same thing on repeat. Now, because it's Friday, I was waiting for a reason to exit. What can we do to exit? Well, we can, the same way that we follow this risk management style to get in, we can follow to get out. Because we know that now we have this 3-box setup where? From here, right? So now price should technically hold this and keep going short. So if we fail to hold the 3-box, what does that mean? We can get out, okay? So let's see what happens. Because I remember I closed this. So we break above, so the 3-box is failing, which means now we have a bullish 3-box. I waited for one more 3-box, right? So now we have the bullish 3-box, right, to go long. Makes a pullback. Breaks again. What is that? That's 2 double 3-box strategies, basically, in the bullish direction. So at that point, I was ready to close. And that's it. That's all it took. And my entire position, I collapsed right there, just before the end of the day. And then price ended at the end of the day right there. Right, and now, of course, if you held this over the weekend, I mean, I'd still be, if this was a Wednesday trade or like a Monday trade, I'd be still holding this to here. And that's why my bias is still bearish. Nothing has changed. Now, it might look like this is only something you can do on the higher time frame, on the lower time frames in terms of management, but it's not, right? What you can do is this idea of zooming out can now be applied. Let's do a quick example and then we'll end out this video. But let's follow this, right? Here's that zone again. Same thing. I waited to get my entry, but you could have not waited. How so? Price comes in, right? What do you have? Weak to strong hand transfer, or buying climax, AR, ST, sign of weakness in phase B, up thrust, UTAD, sign of weakness, the breakdown, right? Break of structure. So what do? We can sell our Wyckoff schematic. Here's your sell. Stop loss above the protected high, because we still have to protect our high based on this Wyckoff schematic, or we could have reconfirmed in here if we wanted to, but since this is how I teach you to view it, that's what we do. Overall target, down here, for at least this impulse. Overall target, where? Here. Notice the RR we're getting on this, 1 to 15 if it runs, right? Same thing. But now here's where someone goes wrong. A lot of people will do this, right? This is a higher time frame approach and it's all the same thing. But what they'll do is they don't realize that breaking even doesn't mean you need to be up a ton of profit, right? What does that mean? That means that if we follow the actual move, right? So let's follow this move. Price comes up. Right, now we can follow this on a lower time frame. And what we can do is we can zoom out, right? If we follow this, price comes up, makes the high, begins to break down. There's a 3-box in there. So right now, the second that 3-box gets made, right here, this bearish 3-box gets made, and there's this zone right here, you can already manage your stop loss to here. You understand that? Because this is the new 3-box. So what we just did is we've taken off 0.5 RR risk completely. And we've just secured it for ourselves. So even if we're wrong about this whole move, we're actually losing less than what we would have lost, right? That's a very vital element because you do this 100 times or 1,000 times, it changes your system big time. And we haven't even taken a partial off of this trade. Then it breaks again. And where's the 3-box that breaks that structure? Right here. Boom. What does that mean? That means price, from a standpoint of this bearish structure, should never really come back above here. It can. So what does that mean? That means we can go break even on this trade. Which means now, even though we haven't taken a single partial, and we still might be wrong about the entire direction of this, it might never come here. It might just go long. And if we're wrong about the entire direction, and the whole 3-box setup has failed, are we wrong? Yeah. Are we profitable? Yep. Did we lose any money? Nope. Why? Because we're still following the inside 3-box methodologies. We understand this multi-time frame approach, and we allow it to justify ourselves to move our risk accordingly. Just like that 1 second chart, before I even took a partial off, had a break even that was ready on it, you can do the same thing on these higher time frames. It's no different. And now for its final little like conclusion, because I remember doing this and I made a video on it because it was so funny, because it worked so well. We did this on a 3-month chart or a 6-month chart. I'm just going to show you very quickly. Yep. Oh, wow. It's going so well. Check out my previous videos. I break this down. I actually made this analysis for my mentorship back when I first started around here. So in about 2020. Been right about it so far, but it's the same thing, right? What do you see? Impulse. SND, right? I think this was a 6-month. Let me double check. There you go. 6-month, breakdown, looking for it to come here and go short. Okay? We go to the weekly to confirm it. What do you see? Wyckoff. I'm going to get rid of these. Wyckoff, right? We enter on the retracements of the Wyckoff. So this was inside mitigation. So let's do a real Wyckoff, right? So weak to strong hands, breakdown of structure, enter on the supply zones. So you can have a sell set right here. Supply set right here. Stop loss still has to be protected above the high. Stop loss still has to be protected above the high because you understand it's the Wyckoff setup here, right? That setup's the one that holds. Great, right? Or you wait, right? You have a new 3-box setup, right? Impulse, SND, 3-box setup. You can sell that 3-box setup or 50% of it. Both are valid. Remember, we're on a weekly chart now, and this looks no different to my entry that I just showed you on my second chart, right? But what's interesting, you're now holding this trade, right? And it's here right now, right? You're already up 1 to 6, and your overall target is at around 1 to 11. Again, a very higher R for a very high time frame. But what's interesting about this trade is, guess what? Let's follow it now on a little bit of a lower time frame in terms of structure, right? Price comes in, that's our entry, and breaks down. Where's the 3-box setup now? Right here. Which means what? We can already lock in this high, which means we've now already taken off 0.5 RR of risk. We've just secured that much off. We basically just, because now price can go here and we invalidate our move. Done. We've basically locked in money for free, and it hasn't even reached a low. It hasn't even reached its defined area that it wants to run to. It hasn't even reached its higher time frame 3-box setup. But we can still change it based on the 3-box setups. So let's follow this further, right? Comes up, breaks down. Where does that breakdown come from? This 3-box setup, which means price should never really come above this high, which means what? We can be break even on this. So now we might be completely wrong about this entire move, but we're break even now, right? So there's nothing to worry about, all right? And then as it breaks down further, you could trail or you could leave and partial at major lows as you go. And once again, you have the same setup, the same exact setup that I've taught you to view on this channel over and over again, that's being taught to you kind of poorly by other channels, but that's okay, because now you get to see this from a risk management perspective that you can now utilize and recognize that it's not about being always right about the direction or the 3-box, but instead partnering your 3 boxes with those higher time frames and then managing them accordingly, regardless of the time frame you're entering on. All right, so now that you got that in mind, go get on the charts, go and test this. It's all there. You don't have to join my private mentorship to learn this whatsoever. The private mentorship has this on a level that's probably unbeknownst to you and goes much deeper. So check it out if you want. Of course, I'm going to drop that advertisement as mentfx likes to sponsor me. So yeah, check it out if you want to. Otherwise, enjoy this free video. Please leave a comment if you enjoyed it. Leave a like if you liked it. Leave a dislike if you hated it. But let me know why, because it's always nice to hear from my haters. And thank you guys. I appreciate it so much. Have a good one.